You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Well, hello again, and welcome to another edition of Talking Real Money, the radio show / podcast. I'm Don McDonald. Over there's Tom Cock. We are your hosts here all week long, practically, for information, conversation, education, illumination.
Now I was waiting for that.
I wonder what else I got. I got to think. Elucidation.
Oh, that's good.
Explanation.
Edumacation. Did you mention that?
For the stock brokerage firm, infuriation.
Good. You're on a. I'm stepping away from the mic. You are on a serious roll.
Money stuff. I don't know. Yeah. Just call us. You got a money thing going on? Call us. If you want to know how to better invest for your future, call us. If you've got somebody pestering you to do something, call us. It's easy to call us, and it's really, really easy today because it snowed in Seattle, which took everybody off the roads. 855-935-TALK is our number, 855-935-8255. Probably won't be a lot of COVID spread today, though.
No, there won't be a lot of COVID spread today. The only people I've seen on my road have been on a piece of plastic going down the hill. So I think there's more people doing that than driving around.
Piece of plastic like Reynolds, like saran wrap? What are they?
No, like a sleddy type of thing.
Oh, a sleddy thing. You just like a piece of plastic.
It's not
I'm thinking
a sled because a sled has rails on it.
You're talking about the saucers.
Yeah,
the
some are on
saucers,
some are on longer ones. They're a piece of plastic, and you go down the hill.
So like it's a plastic toboggan. Is that what you're saying?
Yeah, I live on a big hill, and it's a good hill to be out on.
Yeah, so. Except it ends in big trees.
Yes, if you go all the way down, you are in serious trouble, my friend.
All right, so I think we've set that up properly, have we? We've given the number, 855-935-TALK. Yes. We've talked about what we talk about, and here's an example of some of the things we talk about. We talk about how you, and I have to say you, I can't say we because I don't do this, Tom doesn't do this, how you continue to believe that investing is something other than what it is. You just continue to want to think that there is something predictable about this, that there is someone with greater knowledge than you have who can tell you what to do with the future. And they're always asking, we do a talk show. People are always asking us, well, what do we do about the market? What do we?
Yeah, I'll give you my two biggest questions.
Yeah, what are your two biggest questions?
That they're almost about 90% of the time when you're kind enough to call us and say I want to talk to you. Mm-hmm. 90% of the questions are either A, do I have enough money to retire, which is a good question. The problem is it usually goes immediately to how should I invest? That's way down the road when it comes to figuring out your retirement, okay? But the other one is, that's my favorite. Why is my portfolio underperforming compared to my brother's portfolio, my sister-in-law's portfolio, or the benchmarks?
Oh, yeah. And the fact of the matter is that every one of these is putting the cart before the horse. Exactly. It's getting this whole thing backward. How do I have enough to retire? Maybe, maybe not. We have to have, because you need a plan first.
You broke the code. That has to be the thing for both of them. But when people say I'm not making as much as, okay, that doesn't generally matter. What you need to make as much as is how much you need to get through retirement and how much volatility you're willing to accept to get it. Right. I'm jealous of my neighbor because he got rich owning GameStonk for the right period of time.
But here's the big question that underlies all this. What is the thing? I need to know the thing.
Yeah.
And I'm telling you, most of you believe somebody out there knows the thing.
And we've got those people on a Retire Meet next Saturday, but they're going to admit that they do not know the thing any more than Jim Cramer does, Mark Cuban does, etc. That all the people that are telling you that they do. They don't. Sorry.
Elon Musk, Shaquille O'Neal.
Law Rule, yeah.
855-935-TALK.
And Don are talking real money.
Retire Meet has gone both national and virtual. Join Tom and me along with a host of other retirement experts at Retire Meet America 2021. Reserve your place now at retiremeet.com, retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
He talks right into the intro music.
I'm sorry.
I record it here trying to...
Well, there's somebody who wants us to show this live on video. And I
no.
keep saying, bad idea.
No,
really
I don't want...
idea.
No. That's our... The breaks are a little private time.
It's our time
you
spent
see
together.
what we're doing. 855-9... This is the public part of the show. 855-935-TALK is our phone number, 855-935-8255. And we now have people lined up to ask questions.
Got in their cars and driving around.
Exactly. They went out the car, turned on up because they're going, oh, wait, aren't Tom and Don on? We better get out to the car.
So a friend of ours who wrote in, who listens at home, just wrote in and said, Dogecoin equals Dogecoin, dodge it. I thought that was pretty creative.
And he said he listens at home. For that. He listens at home on his phone.
Yeah.
Yeah.
Which you can do very easily.
Yeah. As a matter of fact, I went out, I was during the top of the hour break, I went out, was talking to Debbie, and I said, we're not getting a lot of calls because a lot of people don't listen at home. And she looks around the house and she goes, I wouldn't even know how to listen to the radio at home.
All you got to do is say it.
That's what I said.
Okay,
I said,
play Como
hey,
News
Siri,
Radio,
play
bang,
Como
right
Radio, and
Google, whatever.
Let's see if she'll do it. Hey, Siri, play Como Radio. Wait.
Now playing Como. Here's Como.
There we go. And that was you.
That was you.
Because it's, of course, delayed.
I sound great.
All right, I'm going to stop you. Stop.
Should we go to the phones?
Let's go. Well, I'm trying to turn you off.
Well, you deal with that. You deal with that.
855-935-TALK. Who's next? You just go.
Bruce, thank you for calling the program. How can we help you?
Thanks, guys. So I recently, about a year ago, got my dream job, make this great salary. I'm 52 years old. Aside from this great salary, part of what I receive in compensation is anywhere between $50,000 and $75,000 a year in restricted stock units, which is basically company stock that vests. If they give me a $25,000 chunk, then 1/3 of that will vest 1 year into it, a third will vest in the second year, and then I'm fully vested after 3 years. So I'm continually receiving these huge stock bonuses, and as they vest, of course, I receive a tax burden as well. So I'm wondering, what is your advice on the best ways to invest this? Do I let it ride and keep it in the stock, pay the taxes, or do you have some other advice on better ways to invest that, knowing that I want to retire in about 10 years here? So
anything that is no longer restricted, I would absolutely, I don't care what it is, I would sell it and diversify it.
Here's the caveat, because there may be, depending on how long you're going to keep that, in your words, dream job, congratulations for that. You may try to game it from a tax standpoint, but if you're going to keep that for 10 years, for example, I'd be with Don. Sell them as you get them. As you can mature.
As they mature. Because here's the thing. I don't care how dreamy your company is today. There are forces in the market that have destroyed the best of firms. And nobody in the company, not even the CEO, according to Ken Lay of Enron,
I was just going to use that example. Thank you.
Know that the company is about to collapse. And what you're doing is you're betting your future on, and you already bet your future on it because it's your job.
Well, and so in this case, then you're adding on your retirement in a way to the bet, right? Not just my current job, but the future. Is it going to be okay? So I'm with Don. I think I would be selling them as available. There's no trick to reducing your tax bill around any of this. No.
You just get to. I like to look at it this way: if somebody gave me free money, they gave me $100,000, and they said, "Hey, Don, you got to send the government 25,000 of it. You're only going to get to keep 75, or you could just not take it." I'm going to take the 75. Thanks for the call. 855-935-TALK is our number, 855-935-8255. And I got to find it here. My list is
Susan.
Susan. I got off my thing with Siri. Susan, welcome to Talking Real Money.
How are you?
Fine, thanks. So I'm 50 years old, and when I started in the workplace, my company had a pension, which, of course, they stopped adding to many years ago. But it has a cash value of about $98,000. So what I'm trying to figure out is what do I ask about or take into consideration, whether to just leave it there until I turn 65 and retire, or whether I roll it over to an IRA or do something else with the money.
Okay, I want to hear. Did you say it's frozen? In other
Yes,
words, the
company
value
has
of
not-
that.
They're no longer contributing.
Okay,
Correct.
so that's an easy one to me, because then I would be saying, if possible, because every plan has different rules about this, I would roll it out into an IRA, for example, so that it would be increasing in value over the period of time between now and when you retire.
Yeah, because the odds are that I don't know what the pension payments will be when you retire, but my guess is they'll be close to non-existent. They're going to be in the hundreds of dollars. Whereas if you invest that, and over a decade, if you invest that even moderately, you should be able to come close to doubling that amount to $200,000. And at 4% per year, just doing a 4% withdrawal rate, you can pull out $800 a year from that and not touch your principal probably.
Well, that's wonderful. Thank you.
So I would absolutely.
Yes, but you have to find out what the rules are. I mean, again, that's what I'm saying. You may or may not be able to roll that out into an IRA anyway. I don't know.
But if you can,
plan has. Yeah, I'm with Don. I would do it. Take advantage of that. That would be the better way to handle it, because you'd be getting growth as opposed to having it sit there not making anything.
And the thing people forget about pensions is that when you start taking the pension, that principal amount that's in there, whatever that might be, is lost forever. You have now agreed to an annuity.
And I want to thank Mary from Bellevue, who just texted me and said, the Enron example is getting old. Can you do something more recent? I'll come up with Washington Mutual then.
That's not that much more recent.
I know, but that one's 20 and one's 15. So
All
it's
right.
5 years more recent.
You love WAMU's story.
Tom and Don are talking real money.
Learn about estate planning, Medicare, Social Security, senior housing, investing for retirement, generating income in retirement, and protecting yourself from consumer scams, along with a special keynote duo, Paul Merriman and David Booth, the founder of Dimensional Fund Advisors. Reserve your free place now at retiremeet.com, retiremeet.com.
Your guides to a really great financial future. Tom and Don are talking real money.
The only reason I continue to use the Enron story, though, is because Ken Lay was one of those CEOs who just was so in denial, not just up to the end, but after the end. He kept saying, I didn't know we were in that bad of shape.
Kerry Killinger would say the same thing about Washington Mutual.
No, he knew they were in that bad of shape. He just thought they were going to get a bailout.
Like everybody else got in 2008.
Yeah, but see, the thing about Ken Lay is that he played the game right out till he died. You know,
which was about 2 months later.
I had no idea.
Afterwards.
I didn't know.
No, I mean, Kerry Killinger would tell you, we were okay. We got a little overexposed. Mortgage thing blew up. And if they had done for us what they did for all those banks in New York, we'd still be here. But we were in Seattle, so we didn't get treated properly.
Well, because you're on the, yeah, of course, not New York. New Yorkers are biased. Little Florida banks didn't get bailed out either.
I'm going to let you say that.
855-935-TALK, our number. Oh, next up is Scott. Hi, Scott. Welcome to the show.
Thank you. Hey, my son is bugging me to go into Bitcoin. I don't understand it. And would it be a good investment?
No. Do you see how quickly I said that?
I'll add to it.
No.
Absolutely no. How about that?
Hell no.
Well, there you go. We can say that now. Now, I mean, here's the thing.
We can. It's not 1935. Yes, we can say that now.
Good. 1958 when you're only making $3,700 a year. No, here's the thing. There is no reason to believe that Bitcoin will be a great long-term investment for you or for your son because it doesn't produce anything, because it has no value other than what the next person believes it's worth. It is purely a speculative. I hate to use speculation.
It's a speculative speculation, not just a speculation. It's a super speculative speculation. It's a speculative.
Why does he want you to buy it?
Because it's
hot.
Why
does he want you to do it? Is that right? Tell us, Scott. Why is he saying, Dad, you got to own this? How come?
Oh, because he thinks it's hot.
Yeah, there you go. I got a better argument for him. Should you invest in the euro or the yen or the won or the dollar? Well, you already invest in the dollar. Everything you own's in the dollar.
Big time.
At best, and I even will argue this, Bitcoin is nothing more than a currency. How many individual investors gamble on currencies?
And it's not even a currency because
I said I would argue.
Don't accept it for taxes. You can't pay your taxes. I mean, I don't think it's a currency until they say, sure, pay us in Bitcoin.
It's a criminal currency and a Tesla currency.
All right. Well,
you can buy a Tesla with Bitcoin.
Yeah. I'd love to know how many they've sold so far with Bitcoin.
Oh, I started to keep a Bitcoin Tesla index. I did. I started tracking it because I thought I'll track it day to day to see what the dollar price of a Tesla changes to day to day. Like one day it's $42,000. The next day it's $72,000 because Bitcoin's all over the place. Whereas if you bought it in dollars, it's the same darn price.
Well, no, that would actually be a good idea because then you wait for Bitcoin to crash, then you buy your Gullwing Tesla.
Oh, is that called timing?
I think
car buying timing.
I like it.
I don't.
Before
you know
we go
how
to the
much
bottom of the hour break
What?
To hear more about the snow, because nobody knew it snowed. I'm really glad we're breaking in with that. But I do want to mention, because we're almost out of time today, that next Saturday is, and you're the master of all of this. You put it all together. Next Saturday, honestly, even though we're not going to see you and you don't get a sandwich, it's the best Retire Meet we've ever done. And that's saying something because this will be Retire Meet 7. We're calling it Retire Meet America. We should be calling it Retire Meet International. And it's got the best lineup of speakers we've ever had. It's all virtual and it costs absolutely nothing. I'd say if you're 50 and older and thinking about retirement, you've got to attend. Paul Merriman, Don McDonald, David Booth, everybody's going to be there. RetireMeet.com.
And give us a call, 855-935-TALK.
Tom and Don are talking real money.
Now everyone can meet the retirement of their dreams at Retire Meet America 2021 online. Sign up now for free at retiremeet.com. That's retiremeet.com.
Reality radio for a really great future. We're talking real money.
855-935-8255 is our phone number. I found my Bitcoin Tesla index spreadsheet. I started it last Monday, when it was announced that Tesla would start taking Bitcoin for Teslas. I used a Model S base price.
Yeah.
Okay, the cheapest one they have.
Is that
$37,990 is the base price for a Tesla Model S. At the time I started this, Bitcoin was at 43,000 and change, which put its price, the Tesla Bitcoin price, at 0.88 Bitcoin.
I got it.
All right.
Makes sense. Yep. Mm-hmm.
As of today, 4:30 Eastern time, The Tesla Bitcoin price is 0.82, lowering the price of a brand new Tesla Model S from $38,000 to just over $35,000.
I guess the question at hand would be how quickly Tesla adjusts all of that.
I don't know.
And what kind of fees and everything you pay for the privilege of using Bitcoin.
But what this tells you is in 1 week, this is a terrible currency. Can you imagine the price that you pay for something fluctuating 7% in a week?
Yeah. I mean, you got to go back to the Weimar Republic or Argentina or somebody like that to see the same thing. It doesn't make sense. I agree. So, anyway. But we'll be watching that. That'll be an interesting thing to keep track of.
I am going to keep track of this. I've got it right here on my computer.
Fascinating.
855-935-TALK. We have lines open. We have time for you too before we get out of here on this Saturday and then turn this magically into a podcast that we'll put up next week on TalkingRealMoney.com and all better podcast services worldwide. Not just nationwide, worldwide.
This is global.
Bill, you're next. Welcome to Talking Real Money.
Hey, Bill, how's the snow treating you?
The snow is great. I'm sitting in a warm room looking out the window and enjoying it.
There you go. Perfect. That's what everybody should do.
Or sitting in the hot tub.
Yeah, we'll get to that later. Go ahead, Bill. Yeah.
Okay. And thank you guys for the wonderful show. Valuable information and entertainment. It's a good combination. Okay, we are in our late 70s, and through the kind of windfall that comes sadly out of being in our age group, we are suddenly and unexpectedly the beneficiaries of what is for us a significant financial change in our financial status. We have followed your guidance. Our only investing experience over the years has been in 401k and then IRAs, all with Vanguard. All that have done well because we understand our risks and our needs. But now we're going to have to invest in a taxable account. And the account at Vanguard will be based on the Life Strategy funds, which are essentially funds that reflect your two-fund philosophy.
Mm-hmm.
But this is life-changing, and psychologically, we need to take a little bit of current income out of it while we maintain this windfall for the unexpected emergencies and inevitabilities of life. And looking at last year, just as a reference point, if we had taken dividends from the total portfolio, that would have provided an income that would have made that significant little boost in what we can spend and donate, regularly. But interest rates are falling, and I wonder what you think about looking at the whole fund. And by the way, we would be in the range of 30 to 40% stocks of treating the stock portion of that as a source of income rather than reinvested dividends. And then we would take the variation in the inevitable interest and dividend rate variation, as opposed to just saying, okay, every year we'll take 2.5% or 3% out, no matter what has happened to the value.
Let us continue on the other side of the break because we've got to take the break. We'll try to help you figure this out. I think you're kind of getting on the right track, but we'll play with this a little bit. 855-935-TALK.
Tom and Don are talking real money.
Our biggest event of the year, Retire Meet America 2021, is now available to everyone in the country, and it's absolutely free. Sign up now at retiremeet.com, retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
Hi. Welcome back to our little get-together called Talking Real Money. I'm Don. That's Tom. We have Bill on the line. Bill just came into a windfall and is going to be investing it in a well-diversified portfolio of stocks and bonds, where he's going to have about 30 to 40% in equities. And I think what you're asking, and correct me if I'm wrong, is you in addition to the income you get from dividends and the bonds, which is minimal, you want to use some of the capital gains from the stocks as an income stream. Is that it in a nutshell?
Yes, except on the stocks do pay dividends also.
Right.
Yeah.
I said dividends plus income. Yeah.
Right. I just want to be, and of course, if I take the dividends in a life strategy balanced fund, that I assume that's all dividends, both stock and bond dividends.
Correct. Yeah, it's interest rate and interest and dividends. Yes, and it's going to be minimal. It's going to be in the 2% or less range.
Yeah, somewhere there.
Here's the thing about the 2%. We've already thought this through, and naturally, we would look forward to a time when bond rates, get a little better, but we can't predict that. Right now, they're getting lower. What I'm thinking of adding, and this is in honor of Paul Merriman and his appearance on your show a couple of weeks ago, I'm thinking about what if I salted this primarily index?
Yeah, okay, that's what I thought you were getting at, Bill. That's what I thought you were getting at.
And
here's what we call it. We call it a flexible withdrawal strategy. All right? What you do is you determine what the amount of income that you need from the portfolio is. So let's say in this case, you start out year one and you're going, okay, I need a total income from my portfolio of 5% of the value. All right? You with me?
Right. Yes.
So what you do then is you have a withdrawal made from the portfolio of that 5% of the total portfolio value. That it will include some capital gains, or could be just some principal, because you need somewhere around that amount. Some years it'll be some of the principal. Other years there'll be more capital gains than you even need. We have run numbers on this over decades, over multiple time frames, and with a 60-40 portfolio like you're looking at 5%.
I thought you said 30. I thought you said 30% in stock.
I'm sorry, 40-60. 40-60, I meant to say. Yep. We have never, at 5% per year, which is what my example was, we have never seen a scenario in which you would have ended up going negative over your retirement.
Well, plus the fact you're starting in your 70s, no offense. I mean, you're not old, but that's, the money should last your lifetime. So what he's saying is, and I agree with this, and this is something we'll be talking about at Retire Meet. Actually, I will be talking about it next week, is a withdrawal strategy that will sustain the portfolio. So yeah, I would set aside the dividends and the interest and all that. I would just let that go. That is part of the overall portfolio. I would say I need this much out of the, and just for sake of argument, I think 5% variable withdrawal. So the years you have a great year, you get a little bit more. The years you have lousy year, you get a little bit less.
And that's kind of like what you're suggesting.
60 or 30-70, yeah, you're not going to have that much volatility because your stock exposure is relatively low.
Great. Now, let me just ask the how this actually works. For one thing, Tom, what you just said is, I realize if you're looking over a year, if you're not taking monthly or quarterly dividends, those are being reinvested during the year.
Yeah.
Can you instruct Vanguard, and this would be with Vanguard, can you instruct them to automatically, at year's end or whatever you choose, to automatically make that deduction and move it into your money market account?
They can do one or the other, yeah.
Yeah, and that is exactly what we're suggesting. We're suggesting that at the end of every year, or whatever date you choose, whatever your fiscal year is, you say to Vanguard, I want a distribution of 5% into my money market account, 5% of the total value, and that is your budget for the next year.
You guys are great. You've answered my question. I really appreciate it. We really appreciate it.
Thank you for the call.
Thank you.
Take care, Bill.
And by the way, we always want to honor Paul Merriman, who's been a friend and a colleague for 30-plus years, and kind enough to be part of Retire Meet America next Saturday.
Paul likes coming to Retire Meets.
He's always great. He's always popular. People love him, and I got to have a big hook to finish because he'll want to go on longer, but that's a whole other topic.
Yeah, and everybody who's participating in this needs to stop on time.
Yeah.
And you know who you are, those who run over.
We got one more call. You want to get to him?
Yeah. We got time. All right. Dan, you're up next. Welcome to Talking Real Money.
Hey, Dan.
Gentlemen, good afternoon.
How are you, sir? What's up?
First of all, for those who haven't signed up yet for Retire Meet, go do it. I've listened to the one you had on YouTube. I attended last year. It's absolutely fantastic, start to finish. It's a must-attend event for anybody.
And it's easy this year. You don't have to go anywhere.
That's right. Right. Everybody can attend. Simply have to have your Zoom call, and away you go.
Yep. It's easy. Hey, Dan, what can we do for you today? Thank you.
My question is, I've got an acquaintance who's been very successful recently in the foreign exchange market. I do not understand that market, so can you give me a short tutorial on what it is, how it works, and why or why not money go there?
The only thing I know about it is I think we had a girl from Sweden who came and stayed with us when I was a junior in high school.
Wrong foreign exchange, Tom.
That's the only one
Although
I know.
if she came from Sweden, I can understand why that's stuck in your head.
I know, bad, but still, I don't trade in, I think, Forex, right, is what it's called.
It's called
right?
Forex, foreign exchange.
Yeah, it's just a speculative.
He's of no help whatsoever, is he, Dan?
None on this one, that's for sure.
Yeah, none whatsoever.
Thanks, Dan.
It's very simply, I'm going to just make it real simple because it is really simple. What it is literally you're buying futures contracts on the value of various currencies versus the dollar at some point in the future. And let me simplify that even more by saying you are actually betting on the direction of the U.S. dollar against a currency. You're betting what direction the dollar is going to go.
And I didn't really look at the dollar last year. I don't know how it did. I don't
pay any attention to the dollar really that much.
Yeah, I used to look at it more often, but because
for example,
so
right now,
you buy are hedged.
A dollar, and I kind of watch this because I've been to England, and a dollar right now is trading at a pound is trading at $1.38. So it takes $1.38 to buy a British pound. Many years ago, it took $2 to buy a British pound. When I went there the last time, many years ago, it was $1.50. So what you're doing is you're making a bet. And, yeah, you can do well. I remember actually making money once at Vegas one time. I did well. I made money one time. The rest I didn't. This is the same kind of thing, Dan. This is gambling, pure and simple. And, yeah, gambling does work sometimes, but it fails more times than it wins.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
There's so much snow, we only have 30 seconds to tell people about Retire Meet.
Hurry.
Now it's only 20.
Yeah?
15.
Okay, you gotta join us next Saturday, 8:00 in the morning Pacific time. RetireMeet.com. Great speakers. It'll be entertaining and highly educational. How's that?
That's good. Over 1,000 people have already signed up. We hope you'll be there. Go to RetireMeet.com. RetireMeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.